to have an interesting discussion today. So let's first of all introduce ourselves, and as part of the introduction, I'd love if you could mention, kind of how you got into whether it's emerging markets or financial inclusion, and we'll obviously dive more into that topic as we go. So Flavia, why don't you kick us off?
Yeah, sure. So amazing to be here, guys. Thanks for the invitation and for the time. I'm Flavia Rosario, CMO for Cora. Cora is a fintech company in Brazil. We are focused on SMBs. We have 4 years old, 1 million users, 1 million clients. And Cora was created with the understanding that there was no proper bank solutions or proper bank for small and medium entrepreneurs. And the idea behind Cora is that if you can help those guys, we can increase and better off the economy in Brazil. So we were definitely thinking about the UN SDGs as part of like our business plan in the start. So that's how we tap into inclusion. Yeah.
Awesome.
That's wonderful.
Yeah.
Hi, everyone. I'm Diana Paredes. I'm going to let you know that this is going to be the most exciting session of South Summit. We've already decided. And for all of you for staying with us as well, because we know we're one of the last sessions, so we appreciate it. I'm the CEO and co-founder of Swiss. We do regulatory software for the financial industry. We do analytics, calculations, and reporting. We have the privilege to work with, like financial institutions around the world, as well as regulators. I am half Greek, half Peruvian, so I have an angle from you on emerging markets, which I feel very passionate about, is that in some ways, emerging markets are a bit of a blank canvas. There is a huge opportunity for innovation. And in the regulatory space, which is so complex, in sophisticated economies, there is a huge opportunity to start something new and fresh. And so that's a bit the interest for me in this panel and this conversation. Thank you for having me. I'm looking forward to the discussion.
Awesome. Nathan?
Hi, so I'm Nathan. I'm a born Brit, and I'm a German resident and naturalized citizen. I've seen the good, the bad, and the ugly of the financial services industry over a 30-year career, and founded my company Fulfin in Munich 5 years ago. And we provide short-term credit to the digital economy entrepreneurs. I'm a physicist by education, and my whole life has just been about solving problems. And this is a really, really cool and interesting problem to solve. It shouldn't exist. Why good people, good credit, good founders, good companies in an overbanked environment, such as Germany, are massively underserved and don't get the capital that they need to grow.
Awesome. And I'm Benjamin Gleason. I'm actually originally from the US, but I've been living in Brazil for 15 years. And I did a first fintech about 12 years ago, Give also, where we were trying to go after the B2C problem, where consumers don't understand about finances, don't have access to good products. We're able to help bridge the gap. And over the course of 10 years in a fast-growing company, I also realized how hard it is when you lack the tools and you kind of lack the basic financial products for fast-growing businesses. And so about a year and a half ago, we started Camino, which is basically trying to address towards fast-growing companies in Brazil to help them with an all-in-one financial solution, very specifically focused around spend management and with embedded payments. And so we're kind of early in the journey, but clearly these are the companies that are going to be driving new GDP growth, driving new employment. So we're really excited about the opportunity that we see there, in the financial inclusion space. So why don't we, start off by, I think each one of you will come from a little bit different angle, but it would be great if you could give a specific example of, where you've really seen, an exciting opportunity that you're working on, and how, I think people always talk about financial inclusion, but it's like, how do you actually generate it? How do you actually measure it, right? And that's where I think maybe fintechs can be better at it than big institutions. So I'd love to hear, kind of how you're thinking about that, and really, if you have any numbers or have any clear examples about the impact that you've seen, I think that will help to kind of drive it home for people about very diverse opportunities, diverse different countries, diverse segments. But I think there's tons of things still to be done by fintechs.
Okay, so
Yeah.
I can start. Great. So as I talked to you guys when I was introducing myself, we started as a company and we are built for small and medium businesses. And in Brazil, there are 20 million of them. They're responsible for 27% of the GDP. But 75% of those businesses, they are run by one person only. They're solopreneurs, as we call, or a MEI. And those guys, they were unbanked at all. Like there was no, for them to open an account and get paid or receive, it would take them potentially like 1 week to get that account ready if they get it approved. So by offering them a free solution, 7 minutes they open their account, they got it approved, and they can actually get paid, we are offering inclusion per se, right? So I think that's the first example that I would give. But not only that, like as the market has evolved, for instance, there's one specific product from like that Brazil has launched, which is like PIX from the central bank. And now there's PIX for companies as well, your ability to transfer money from one company to another. And what we have, all the banks around, or the neobanks or the traditional banks, that also are part of the ecosystem and are offering services for those same companies, they are charging all those SMBs for any PIX transfer. In our case, we decided that we should cut down some of the margins in order to offer them the ability to do so. The more like we are bringing those guys in, I think better they are included in part of this entrepreneurship ecosystem, and by doing so, we are actually doing our part as well. So.
That's super. I mean, you know, when I think about this financial inclusion piece and emerging markets, I take obviously the regulatory hat piece, but I always think about it from data, right? And so, and credit and the risk and the regulation around that, around KYC and other bits of compliance. So what's interesting is that when you look at how it is, you know, how easy it can be in some ways in Brazil to give that credit, in more sophisticated markets, that is a much more complicated conversation because the regulatory framework is so complex. And so there is a reality where our approach to regulation in more sophisticated markets is also much more tsunami approach. So, you know, there's more regulation, it keeps being added. And what's interesting in emerging markets is that there is an opportunity to be actually more innovative about how you think about credit risk and about how you think about KYC and other topics. And so, you know, it's a problem for emerging markets that they cannot be drivers of the way the rules are made, because that usually happen in more sophisticated economies, but they can be pioneers in the thinking and in the implementation of some of these global standards. So I think that when you think about the opportunity here is that how do we want to think about KYC, how do we want to think about credit, how do we want to think about, you know, compliance in financial terms in a way that's more simplified, which we can actually afford to do in countries that have less sophistication, as a way to demonstrate what's possible and what can actually simplify in terms of the regulatory piece. And I think that it's quite exciting. You know, we have seen, for example, some things that the Central Bank of Peru has been doing where they were trying to pioneer things even ahead of the likes of, you know, the European Central Bank or the Bank of England or even the MAS in Singapore. And so, is there a problem with my mic? Can you guys hear me? Yeah? All right. But so basically, there is very much an opportunity of using our emerging markets almost as a blank canvas to bring more innovation, to trial innovation, and also to actually come back and have almost like a simplified conversation about the regulatory piece that we have here, and have examples and use cases to say this is how we should be simplifying our approach to KYC, our approach to credit risk, and other things.
We've definitely seen that in Brazil. The central bank is very forward on regulation and driving, you know, innovation and driving inclusion through regulation, actually, which is almost the opposite of what you see in other markets, as you said. So Nathan, you have a little bit different perspective in Germany, but I guess you also see some
one would think in Germany that we should have no problems. I mean, it's a first world country, the first world country, I would say, with impeccable infrastructure. An impeccable financial services industry, probably the world's strictest regulator in BaFin, 1,400 banks for an 80 million population, and yet young founders who are not plugged in to the network have simply no access to credit, and that's the travesty that we are trying to address. In terms of, I think, numbers that you were looking for, I'd look at our own portfolio so you can understand what's the difference between what we do and what a bank does when it does it, or actually they don't actually do it very often anyway. The typical age of an MD in Germany is 52 years old. The typical age of the MDs of the companies that we finance is 34 years old. We have a female founder or MD quota of something like 15%, compared to then we'd look at venture capital, which funds about 2.5% of female founders. 17% of our loan receivers of our loans have an immigrant background as well. So these are guys that, when they start, our customers, our business customers, when they found their companies, the only real option that they have to start is really e-commerce or the digital economy. And they end up founding companies that are high growth, asset light. They're in an industry that has some volatility. And that's everything that the German banking industry hates. It's everything that we love, because we love this data. And we can get our hands on the data. We can build our own credit scoring bottom up. And for me, financial inclusion, it's not about this equality of outcomes. It's not about making sure that there's 50% of our loans go to females, 50% go to people with immigrant backgrounds, 50% of a certain age group. It's really about equality of opportunity. So we are blind to absolutely every demographic that there is, and we see cash flows. And we built our credit scoring totally based upon these cash flows. So we can't help with that very, very first 0 to 1. But as of that point, if some founder manages to get off the ground, very, very quickly, we can get the capital to them that they deserve.
Very good. And just to add, one point in terms of especially the SMB market in Brazil, in terms of GDP, the percentage of the overall GDP is just a fraction of what you'd see from SMBs, for example, in Europe. However, the fast-growing, SMBs in Brazil are driving 60 to 80% of new GDP, of new employment. So that's really, if we can help them become a greater percentage overall of the total economy, they'll continue to drive growth, but then also be much more representative. And a big reason that SMBs end up failing is because of financial disorganization or the mismatch of cash flows. And so that's something we're focusing a lot on is how do you give people the tools to actually manage their business better and spend more time thinking about the business and less time thinking about really about just the pure financial operations. Even me running a startup, I spent an inordinate amount of time, actually talking about why didn't this payment work? Why did this service go off? Because the credit card is not going, not being processed. And so I think a lot of things that people take for granted in developed markets still have a ways to go in emerging markets. And if we can help to kind of bridge that gap, naturally people who are entrepreneurs and going after big opportunities will do better and have this huge impact. And so I think that's where we see really a lot of opportunities. One thing I think would be interesting, we've kind of talked about what we're working on, but obviously if you look at different countries, you look at different segments, there's still, I think, tons of white space, tons of opportunity for people to do more. So as you kind of think about either for people that might be entrepreneurs thinking about this, or regulators or big companies that could collaborate, what's an area maybe that you'd like to see kind of something more done, or do you think there's an opportunity still for people to dive into to create more financial inclusion?
Yeah, great question. And I think so in Brazil, the truth is, although there are millions of companies that are open every day, chances are that in 2 years half of them will be dead, right? And why is that? Especially because there's so many regulations and so many financial needs and taxes that need to be paid. And the guys that are opening a company, they are opening a company to do what they are good at, right? Not necessarily they're good at get paid or good at lobbying with some of the regulators or trying to solve their accountancy. So I think the role of Cora is to simplify the life of SMBs, and by doing so, we are launching products in order to do that. And I think, tying back to your question, Ben, I think the biggest opportunity is going to be through connecting with other softwares, other tools that we as a bank, we are not focusing on developing, but we know that exist. Camino is one of them, and we are partners in that sense. So by combining our offering with other offerings, we are able to give or provide to those guys everything that they need to free their time to focus on their businesses. So we started doing that a couple years ago with accountants in Brazil, and we do have a program called Cora Aliados, which is allied. So it's an affiliate program, and by doing so, we offer the ability for your accountant to get the data from your company in a very easier way. So that's one example. We are building in others. Yeah.
Yeah, happy to comment. Actually, so you just finished on saying about how getting your data in a much easier way.
Yeah.
And so I think that an opportunity which is there and that we have to really all, I guess, lobby for, is to get to a world of, data standardization, of harmonization of the rule, and simplification as well, right? And I think that the problem is that we work within, financial services and fintechs and, regulated fintechs as well as not, work in an environment that is heavily regulated, which can be really a barrier to entry as well, right, for innovation and for innovators. So I think that, what we really should be targeting from like an inclusion piece is like to get to a point where the way we define an individual or a company, the data standards around that, or a particular product are actually much more simplified and are actually, going almost to the core of the ingredient of how someone should be defined. And so that will allow for much more financial inclusion. It allows for business that can be cross-border. It allows for data to travel better from one person to another. We're really talking about like data portability, which we do very badly in financial services. And this is again something that I think emerging markets can do better at than what we have here, because there is a reality where sophisticated economies, or I guess I don't even know if that's the right word to use. They're hindered by legacy technology, by legacy mentality, by approaches to data standardization that don't necessarily work. Whereas again, this blank canvas reality for emerging markets is very real. And so you can be thinking about, pioneering thinking of data standardization, harmonization of the rules, simplification of the regulation as well. That's how I would look at it.
Awesome.
I think my view is simply that the future is verticalization. We live in a very exciting time where niches have become very, very large, and by being able to be a particular type of player within the financial services industry and focus on a particular type of niche, you can do something differently. We shouldn't have the expectation on banks all the time to be able to provide the whole portfolio of financial services. Banks are highly regulated for a reason, because if cash doesn't come out of that machine tomorrow, we all have a big problem. So some types of business, particularly maybe lending to young, high-growth, volatile companies, it's better if they don't do them. They're not equipped to do them. They're running the marathon, not the sprint. So I think what would really help would be a more happy hunting ground, a better environment for companies like my own and others to recognize, okay, let's get efficient capital into companies like Fulfin. Our cost of capital is immense, and we have to pass that cost on, unfortunately, to our customers. Now, if we can get state-sponsored capital that is there specifically to target underserved niches, that will all feed straight back into the GDP of the economy.
Yeah, for sure. And I think, I would just add, kind of even tying this together a little bit, oftentimes the banks kind of feel like, okay, we have all this compliance, we have all this regulation, therefore, we can't innovate, we can't, do a lot of things. And I think, if they could get more comfortable with, you can go to farther than they are today and do more collaboration, because I do think fintechs are going to be more agile, they're going to tend to have more, focus on the customer and the customer needs, typically the user experience, and the customer support is going to be better. But inevitably, fintechs will have a higher cost of capital. They'll have less scale, for a lot of back office and collections and things like that. And so, the more that kind of the regulation and compliance can become clear, and the banks can take a little bit more kind of forward risk and collaborate, I think will drive a lot of financial inclusion forward. Because I don't think any of us alone are going to be able to do this for an entire country. But the banks are maybe not always so inclined to be the first one to take that step. And so I think if we can kind of step together more than compete, it would be a good start.
I mean, I know our clients don't want banks as their partners. Our clients are digital natives. They're partially digital nomads. COVID was a little bit of a game changer with the banks. The first time in Germany, you didn't actually have to go into the branch to get a loan, but you still mainly have to go into the branch to meet it. They want a product, they want a service that is fully online, that is where it starts to end, and the process is hours and days, not days and weeks and months. So banks just simply they have to be legacy, they have to be robust, and that doesn't match with it doesn't give them the ability to get product market fit with this new type of entrepreneur.
And actually, one example from Brazil is just Nubank, which I think a lot of people know. If you look nowadays at like the consumer banking apps of the big banks, at least like Itaú, which is a well-known one, their consumer app is actually pretty good because they're being pressured by Nubank for the last 10 years.
Yeah.
Otherwise, it'd probably look like it looked 10 years ago. So I do think as you have these kind of fintech challengers that are become very relevant, it pushes also the incumbents to become better. And you see that across industries, right? Taxis, all kinds of things. So I do think even if we can start pushing, it pushes everyone else to do better as well, which is a big opportunity.
They have to step up their game.
Did you want to add something?
No.
Okay. I would just say, in terms of the time we have left, if you now look forward, so if we're here, 5 years from now or something, what would you like to see, having happened, or what new kind of technology or trend do you think is, maybe going to drive us much faster going forward?
I think we heard so much about AI, right? So it's like all over the place. And during these 2 days was a lot of talks about it. And in our case, we were like created in a world of AI, right? So 4 years ago, that was already a reality. So, and we think that we can integrate even more. And now we have a team, a generative AI team within Cora to try to learn how to build new products and new solutions, especially to help the management system, right? So as we're talking about simplifying the lives of SMBs, so how can we bring that experience, the management experience, to the UI? And AI is going to help us a lot in that sense. So that's where we are like putting our bets, yeah.
How does AI mix with regulation and compliance?
Yeah, so how that is gonna...
It's a huge opportunity, not just I think for regulated entities, but also for regulators themselves. How do they use, machine learning, artificial intelligence in the future in the way they supervise? I think what happened with Silicon Valley Bank is a very good example of a failure of supervision, effectively, that could have maybe been more, efficient. There's so much data, right, that comes out of regulation and compliance that is actually very close to impossible for a human being to analyze manually. So I think that there's a huge opportunity there. And we leverage of natural language processing in our software, machine learning, and all that good stuff. AI, though, for financial services is still almost a dream, right? And part of the problem is precisely the issues we have around data and data standardization. To train really algorithms, you need copious amounts of data, and the data in financial services is polluted, to say the least. So, the biggest opportunity is definitely that level to reach that mecca of automation that AI presents. But to get there, I think we need to be very aware of the steps that are important to succeed. And for me, very much harmonization, data standardization, think about regulation as something that should be machine readable, almost as a requirement, is key. So I would say those are my big trends. AI, machine learning, definitely, but we need to get to standards to make that happen.
Do you see AI as being relevant with what you're looking at as well?
I mean, we sit on top of two of Germany's what are termed elite universities, the Ludwig Maximilian University of Munich and the Technical University of Munich. 25% of our organization is data scientists, product and tech. You can't not say it. We use it in everything from transaction categorization to data cleansing to evaluating the risk factors that we use to then evaluate the companies, to converting that to explainable AI so that our underwriters can understand that black box that comes out. And it's still not the most important thing. What's the most important thing is regulatory mandated access to data pools. So open banking was the game changer in Germany. So it's APIs and the regulatory mandate behind that to say banks, open up, allow fintechs to access this data. And then standardization within that as well, because we spend a lot of time normalizing and standardizing our data as well.
So you would say open banking has helped your business overall? You have seen that to have an improvement?
And it's not where it should be. I mean, open banking kind of opened up the door to allow us to look through and go, this would be a great world, but they only opened up the door that much. So we get 3 months of financial transactions if we connect to a client's bank account via the regulatory mandated open API. If he sends us in CSVs or sends us in PDFs, we can get 2 years of financial transactions. We can make a better decision. They should open up that API so we can get 2 years of his transactional data if he wants to give us 2 years of his transactional data in return for us creating value. And it's frustrating that the regulatory framework protects the user beyond what he wants to be protected. This is where it's very, very slow and a frustrating process, and then we have to kind of find workarounds to enable our business to function better.
But you see, that's exactly the opportunity in my perspective of emerging markets. Even use cases like this, trialing them is so much easier to do in emerging markets because you cannot, you really can do test cases, have the conversation about open APIs. You know, the World Bank, for example, has done a lot of work in Latin America in particular around how fintech can be promoted through doing real test cases of innovation.
Yeah,
so
there's a lot to do with like the current like central bank. The guys who are there, they are very like driven by this agenda of like opening up the market for fintechs and helping decentralize a market that was only 4 or 5 banks like 5 or 10 years ago. Yeah.
And I think in the U.S., you have like the FICO score, which is kind of just good enough, and so they've kind of stopped there. But in Brazil, you don't even really have like a real, truly powerful credit score, and so that's where you need to have other sources coming in.
True.
And I would definitely say, having been very involved in the open banking movement in Brazil, there's still a long way to go about the quality, the consistency, how much data can you actually access. And I feel like, especially with AI, either like you go across all the internet and then you get, the good and the bad of, this very, very broad data set, or if you're training it on your own data, it can be very powerful, but it's only a specific use case. Ideally, we would be able to like really get a clear view across all the bank accounts and all the ERPs and all these kind of different data sets which are relevant for our customers, and they're wanting to put them together, and different barriers are there trying to keep this stuff from being put together. And ultimately I think letting the customer choose what data do they want and how do they want to use it is better than I'm going to try to keep the customer from leaving basically by trapping them. So I think that's where hopefully fintech will be able to keep kind of pushing the envelope. And I do see like tons of countries actually copying Brazil's central bank to try to develop instant payments, trying to look at their open banking regulation. The Brazilian central bank basically copied the open banking regulation of the UK, but then learned what had not worked in the UK and made it better. And so I do think there's this very interesting role for regulators to see what's been done and try to do it better, as opposed to kind of saying, okay, it's just good enough. So I guess we're running a long time, but if you may just want to make, anybody has a last comment or a last positive word on where we're going with financial inclusion, feel free.
Yeah, I think it's important to say that in times like this ones that there are less capital around, we tend to go after like profitability or CAC, LTV, and we need to think and tie back to the purpose, right? So of like making financial inclusion possible. So this is like something that I would advise you guys to keep your minds on, like look for the long-term effect and not necessarily only the short term.
For sure.
Yeah, I mean, I would just say that, thinking back of emerging markets and the opportunity there, I always like to think of this example from Google. They did an open source project on transportation, on data transportation in Mexico with the World Bank, which basically has ended up being this big success globally because, from Uber to Citymapper to anything uses that standard. So I think that's very much, entrepreneurs, we live by the motto of MVPs, minimum viable products. And I think, we really need to think of emerging markets. They cannot set the standard, but they can lead the way and they can be the pioneers in a lot of these conversations.
Yeah,
awesome.
I should simply say, I think financial inclusion isn't a charity case, it's an amazing business opportunity, and it needs minor tweaks to the regulatory environment and to the investor mindset as well, to the VCs as well, to understand we have to go after banks' balance sheets. Mm-hmm. The balance sheet business is so much of what a bank does, the credit aspect, and companies like ours need support from providers of equity capital to be able to do that. But I mean, with CAC, CLV, our metrics put most SaaS companies to shame. It's a really exciting business opportunity, and it should get more capital that it deserves, so that we can get the capital to younger entrepreneurs that deserve it.
For sure. And I would just say, the last piece in terms of if you're really driving real social impact, it also helps for recruiting. You get better people on your team, more motivated people on your team. So even from that perspective, I think aligning your business goals with the social impact goals can be very powerful as you're building out the company. So I think that's it for time. Thank you, everyone, for coming. And let's hope 5 years from now we see a lot more financial inclusion examples here.